Hey traders, it's Hima here, and I've got chart of the week, gold breaking higher. Today's Wednesday, July 8th, 2020. Now, before we look at the charts, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. So here we have the daily chart of gold futures. So that's symbols GC, and this is the continuous contract chart. Now you can see that gold futures have been consolidating, stuck in a range since mid-April, and they're finally breaking higher. Now, there's two ways to look at where gold might head from here. You can look at the weekly and monthly levels and look back at past levels at which gold traded, old highs and old lows, and use those as your projected resistance levels. So I have those laid out, still valid from the Q2 Skinny Markets Outlook report. So if you have a copy of that, be sure to take a look at it. Another way to assess where gold is headed from here is to take the size of the consolidation range and project it from the breakout point. This is tied to traditional technical analysis in the same way that we measure breakouts for triangles, flags, wedges, and more. So the consolidation that I've defined here has this orange line up top, and then the dashed orange line is a projection of the top orange line. I make it dashed, that way I know it's a projection. It's not an independently drawn line. But notice how when you projected from the low in between those two highs, it beautifully called out the June 5th low, which coincided with the RSI lifting from the bull support power zone. So what I do here, because the size of this consolidation, no matter where you measure, it's going to be the same, I would just take a vertical line tool and go ahead and grab the size of this move, then take that, clone it, and project it from the breakout point. Now, the breakout point, as I see it, is when the future started trading above this level and staying there. So that's yesterday. The actual breakout from the consolidation high is happening right now with today's action. So all of this right here gives you about 1900. So not just a round number, but also a measured target as the next key upside level in the GC futures. So that's important to keep in mind if you're swing trading and if you're day trading as well, to stay with the bigger picture trend. Now, what are the levels to look for regarding if this actually starts to unfold to the downside, if this breakout doesn't sustain? Well, the most important is the most recent daily higher swing low, which is right here at about 1766 from July 2nd. Also keep in mind that we're coming into a key timing point in GC futures happening this week. Again, that was laid out back in early Q2 in the Skinny Market Outlook report. So again, if you've got a copy, take a look. If you don't have a copy and want to learn how to get access to those reports, let my team know and they'll help you out. All right, so keep an eye on further upside in GC futures, and remember to use your measuring tools as well as the past historical price action to find the best potential upside targets or areas to watch out for resistance. Catch you next time. You can sign up at himaready.com/gift to get my hot, timely, actionable updates as soon as I publish right to your inbox.